Right, hello. Welcome to today's podcast. My name is Adrian Bootham. I'm the head of trading here at Trend Signal. It's the 22nd of June 2020, and it is the latest episode of the Trend Signal Trading Podcast. And as ever, I'm joined with Chief Analyst at Trend Signal, Jerry. Hello, Jerry.
Hi there. Hello all.
So a lot to go through as ever as we continue to move through sort of easing of lockdown measures and so on. Stock markets trying to rally, having a good week ish last week, and Trump trying to rally his own troops as well. So let's get on with it. Jerry, why don't you kick us off? What on earth's been going on?
Okay, well, probably best looking at what happened last week. But before I do, I should say that when I woke up this morning, as I do wake up particularly early, you have a quick review of the news and stuff, and gosh, it felt particularly bearish. There were lots of stats over the weekend, as ever, about the coronavirus cases and the spread and all that sort of stuff, and it's pretty shocking numbers. And I think that's one of the reasons why the market sort of opened down, but they've rallied really sharply. But I'll explain the reason why I was feeling so depressed. We had a report from the World Health Organization saying that there was a record number of new coronaviruses reported over the last day, 183,000 in one day, and they reckon the global count's going to hit 9 million, whilst the death toll at some stage this week is going to hit 500,000. So it's big.
Like tomorrow, isn't it? Did you say?
Yeah. I think it is. Yeah. But also, you then had the numbers from the US as well, and they reported their second highest daily total of 27,465. And I know you and I were discussing before we came on air that Trump is blaming the fact that they do so many tests. I think they've done 25 million tests in the States, but the fact is they're coming up positive with a lot of them. But the highest total, that 27,500, that's up from 21,500 a week ago and 19,300 2 weeks ago. So it doesn't, on the surface, it doesn't look good news, does it?
No. And have your commander-in-chief's opinion on this being, how can we reduce the numbers? Let's test less people.
Don't test anymore. Find a very big bucket of sand, stick your head in it, and just hope it goes away.
We can either cure people or just test less people. Which one's easiest?
But you see, the problem is they have eased the lockdown measures in quite a few of the southern states, and it's the likes of California, Florida, Arizona, Texas. You know, these infection rates, they're not going down. I mean, the only thing in the US favor, I guess, is the mortality rate at the moment. I think they reported 297 deaths, which is declining still compared to the previous date at the weekend. But I think I would have thought the assumption probably is that the death rate is a lagging sort of number against the infection rate, and you'd think with the number of people catching it, there are going to be more actual numbers of critical patients, and some of those critical patients inevitably and sadly will die. So you'd think it was going to go up, the mortality rate, the death rate, but
that would make sense, wouldn't it? And yet equity markets, they continue to have these little blips down, don't they? But they continue to go back up again. And obviously this is a trading podcast, so it's not just about talking about the corona, but in terms of the impact on the markets, it's just it always keeps coming back to Tina. There is no alternative, because every time this market goes down, it just goes straight back up again. And I know it'll probably have a big smelly move down at some point, but it doesn't. Who knows when?
Well, if you want to have a look at a chart, have a look at the S&Ps. You get that big sell-off. 10, 12 days ago, 11 days ago. That was on the Thursday, wasn't it? If you see that big hoofing candle, was it? That was 1,800 points on the Dow. The S&Ps, that's huge. 1,880 points or whatever it was. 1,000. 180 points. It's huge, absolutely vast. And of course, it spent the beginning of last week rallying, and it did so on the back of some positive news from the Fed, who came out. And again, what helps the market? The Federal Reserve, the US government. The Fed announced that they were buying corporate bonds, and all of a sudden it's like, hey, it's okay, they're supporting us. So anyone who's long is thinking, yeah, look, it's sold off, we're back up again.
That's it, and it's almost like this sort of element of invincibility with it now. It's almost like it just doesn't matter because everyone knows how important the stock market is to America, so they'll just put in some other policy just to inject some life back into it, even after some more bad news. So you sort of wonder how many people are just buying and buying and buying, and if we do have another big wobble like we saw in February and March, it could be pretty painful.
Well, and you know what? Everyone just expects the Fed and the government to step in and save the day, and they always do. And of course, by pumping more money into the system, all this quantitative easing, whether it be buying sovereign or corporate debt, it puts money into the system. And that's basic. And that money, if you get that money and you're not getting a return on it, and you get a negative return, if you want to put it into bonds or US treasuries, that is, you're going to put it in the stock market.
Yeah.
But as I said, I started off this piece by saying I felt really depressed and very bearish this morning. It wasn't just the US numbers, Brazil and Mexico, massive hotspots there. The numbers in Brazil are going through the roof. Mexico, as we've said, doesn't have the resources to do enough testing. In fact, their testing regime is one of the lowest globally. And then you've got Beijing. There's a new report of new cases there. We mentioned that this time last week, Adrian. But, companies in China are not trouble, but the reaction by the authorities is quite draconian, and they've got some stringent lockdown measures in place. And I'm sure, that's going to be sorting it out there. And Germany, look at Germany, held up as an ideal a country that ideally tackled the coronavirus, but they've had these big localized infection spike in this abattoir. This meat processing factory where 1,300 of the 6,500 or 8,500 workers tested positive. So it just goes to show you, it's not a second wave, Adrian. I think this is just sort of spikes in the first wave.
First wave never really had a chance to sort of finish, did it?
No.
Because we're in such a rush to get things going again that didn't have a chance for it to run its natural course. Yeah.
And I think we're being particularly careful here in the UK. We've got one of the most sort of stringent sort of social distancing measures. The 2-meter rule is only adopted by, I think, Canada and Denmark, is it, or maybe Spain? I'm not sure. One of the. There's just 2 or 3 countries, of which the UK is one of them. And I think that's something that Boris Johnson is getting briefed on today by his scientific advisors. And I think, and certainly, it looks like the 2-meter rule will probably be amended to 1 meter. This is what I'm hearing, with an additional sort of protective measures. So a lot more compulsory wearing of face masks and stuff like that. But so that was all the bleak news, and I thought, oh my God. And then I thought, well, give me some positive news. And of course, Spain, at one stage last week when I was on one of my runs around the fields here, I was listening to Wake Up to Money, and there was a Spanish foreign minister saying, well, if the UK is going to have this lockdown, this quarantine for 14 days, then we'll have to have it for all UK nationals. And of course, here we are a few days later. Spain said, no, come to Spain, it's fine. They removed the quarantine measures, so we can all go on a holiday in Spain, Adrian. So book up that flight, jump on a.
Can't wait to jump in one of those aeroplanes with a load of other people. Brilliant.
Yeah, you'll be socially distancing by 2 meters. Of course you will. You have to put your hand.
Well, interestingly, it does make you think though. If it's only 1 meter, you could perhaps, Mr. EasyJet, whatever his name was, maybe he's right. You could actually just have someone just a gap between each seat.
Yeah.
Don't know.
But I do think that's nonsense.
I'm not desperate enough. We're about to hit another heat wave. I'm not desperate enough for the Spanish sun. I think I'll stick with the UK sun for now.
Yeah, I just saw the weather.
Especially with my fair skin, that's enough for me anyway. Before I break.
Yeah, that's 34 degrees, they reckon, in London this week. So, who needs to go to Spain? Well, anyway, if you do go to
pub
Spain,
gardens back open. That's what we need.
Yeah, that sounds interesting. Yeah, definitely. Look forward to that. But if you do go to Spain, just remember, when you come back from Spain, you've got to quarantine yourself. So it's not quite so straightforward. But I suspect they'll probably change those measures, Adrian, if Spain is allowing us in without quarantining. But
maybe this is the answer, though, Jerry. Everyone, we come back from the stressful experience of coming back from holiday and traveling home. Everyone always says, "Oh, I could do with another holiday now." Well, perhaps this is it. 14-day quarantine home holiday now. Perfect.
Especially if you take your 3 boys off to some hot climate. You'll need a holiday when you get back.
I'll need a holiday
work.
after 2 weeks at home with the kids as well, to be fair. So
A holiday and work, yeah. Anyway, so let's just have a look at the actual numbers from last week, because it's quite interesting. All the markets, the main, certainly the Western markets, the likes of FTSE Dow, S&P, DAX, Nikkei, I say Western, developed markets, all were in recovery mode following that sharp spike lower that we've just talked about in the previous week. Remember, that was one of the biggest falls that we've seen since mid-March. So you think there have been some follow-through? None of it. Thankfully, or thanks to the Fed, who, as I said, came in with that news about buying corporate bonds. But some good retail sales numbers last week.
Just bringing up the FTSE chart here, and we can see that we had the big fall on the Thursday, the 11th, then we had the Friday, a big rally there, and then it gapped down a bit like it did this, today, that we had a gap down on the Monday morning, and also from news over the weekend, and you're thinking, oh my God, but my word, a massive rally Monday and Tuesday, wasn't it?
Well, that's because of the Fed when they made the announcement on the Monday, and it just seemed like it was almost a stitch up. But there you go. That's were the Fed going to make that announcement anyway, or did they bring it forward because of what happened on Thursday, the previous Thursday? My suspicions are they brought it forward. Anyway, it is what it is. But we keep on talking about the dislocation between the markets and the wider economy, and someone made the comment in the workshop this morning and said, the market is not the real economy. The market's the market, and to a certain extent, that's exactly right. The stock markets are stock markets. They're reflecting a diverse opinion of views, and it's based on maybe people taking a view about what they think is going to happen in the next 14, 15 months. You just don't know. What's happening now is what's happening now, but stock markets are really trying to look forward to what is going to happen. If it's bad news, they'll be selling. If it's positive news and they think this market is going to be a V-shaped recovery, which still a lot of people do, up she goes. So anyway, stocks, we've whittled on about them for a little bit here, but currencies as well. If you want to put up the just put up the euro against the dollar.
I was just going to say, you mentioned retail sales before I rudely interrupted you, but retail sales last week was much stronger than expected. Wasn't it?
Yeah. One of the real big surprises, actually, and I think that's just encouraged the market even more. As I said, all the good news was really Monday, Tuesday last week, Adrian, and it all then went a bit pear-shaped towards the end of the week, really. But I think again, that was over concern of the sort of resurgence in the infection rate. But here we are, another few days later, and the market's gone and found a very, very, very big bucket of sand and stuck its head in it again. Anyway, there we go. So currencies, dollar, well, you'd expect it to recover some of that lost ground, really. If you want to look at the, you've got the
I've got euro.
Yeah, that's the one I'd be looking at, and you can see bigger day today, very much in the longer term, so the medium term trend. So the dollar giving ground back again today, which you sort of expect, really. It was the move last week, or over the last sort of 6-7 trading days, a change in the direction of travel. I doubt it. I think the euro, or the dollar more importantly, is probably going to weaken in the medium to longer term. And that is part of that trend, I believe, that we're seeing, certainly today. Sterling, everyone wants to talk about sterling. Everyone wants to talk it down. Everyone's short, maybe, Adrian. I don't know. But, we had that news from the OECD that the UK is likely to be one of the hardest hit developed economies with its reliance on services, etc. But you know what? It always seems to outperform analysts' sort of views and various commentators are always trying to do it in, and I altogether agree with them a lot of the time. And for quite some time, I saw quite a positive sort of slant on things in the FT, saying there were positive developments regarding the EU UK Brexit talks, which I think may put some of the shine back on the currency. And certainly today, we've certainly erased all Friday's losses, haven't we?
Yeah, absolutely. And obviously, as you said earlier, we're sort of easing lockdown measures at a reasonable rate, really, in the UK. So we're getting things back open, but we're doing it sensibly, so that we can try and stave off a big, deep second wave. So hopefully we should be on for the longer term.
I mean, all of this does depend on everyone's got to be personally responsible for being as safe as possible. And I still know some people who just said, I don't care what they say we can do. I'm not going to a restaurant, and I'm not going to a cinema, and I'm not going to sit in a hairdresser and have my hair cut or whatever. And that's the way it is. Dentist as well. Gosh, how can you go to a dentist safely? I mean, who'd want to be a dentist, for God's sake?
You'd be tooled up like you're working in a nuclear power plant, wouldn't you?
Yeah, I'd be wearing a hazmat suit. You probably wouldn't be able to see or hear me if you went to my dentist. But anyway, I think the easing of the lockdown measures, I think, that we're speculating at being announced tomorrow. Obviously, that's not going to be reflected in the numbers this week, which are all these PMI data. I'll talk about that in a second, but that's obviously telling us what was happening last month. But I'm not such a bear on sterling or the UK position. It's bad, but it's no worse, really, I believe, than most of continental Europe. There we go. There's my flag waving for the day, Adrian.
Go on, Blighty. And what about the commodities then, Jerry? So pretty flat on gold, strong on oils though.
Well, actually, gold's quite interesting. Gold sort of
say flat, strong today.
It is. It is. Well, gold. If you look at where it closed on Friday, although it wasn't up a lot, it was like $9 up on the month, up on the week. Sorry, but which is less than 0.5%. But it opened strongly today, then sold off because I thought, what's this all about? But there seems to have been another fresh wave of buying, partly because the dollar's weakened. The dollar strengthened last week, and still gold did all right. Normally, a dollar-based commodity, when the dollar's strong, you'd expect it to be under pressure. It wasn't. So look at what we're doing here. This could be the highest close for a long, long time.
Absolutely. That's exactly what I was about to say, because we sort of rejected that sort of 1750 level a number of times. So back in the mid-May, 3 times it had a little poke above there. But it'd be interesting to see what happens up here. It should probably carry on if we believe chart patterns and breakouts and all that sort of stuff.
Well, you've got to go back a long way now to see prices at these sort of levels. I say you've got to go back a long way. I mean, we're let's have a look on I'm just looking at my own charts. You could look at it on the weekly on yours, Adrian, actually, that everyone's looking at.
Yeah, big sort of number 2012. Around that, just shy of where we are now. Sort of 1780 level, so we're not a million miles away from a potentially quite a big resistance level there.
7 years and 9 months ago. It's quite interesting. I'm not a big fan, but it's a combination of safe haven buying, weaker dollar this morning. Anyway, I don't think it's a great argument for gold at this stage, but you can't buck what the market's telling you, that's for sure. But oil is again the interesting one. If you want to flick back to maybe the daily on.
Yes, the daily. Good point. I've got NYMEX on here, but we can look at Brent as well.
Yeah, so NYMEX okay, that's UK oil. So pretty much the same. We're recovering a lot of those sort of precipitous losses that the market experienced when someone pulled the plug out of the oil bath as it disappeared down the plug hole. But here we are, back up at $42, $43. A relentless move higher. Any short positions are obviously very much against the sentiment at the moment, which is very, very positive. And I get asked, why is it going up? Well, why is all the demand coming from? And remember, like stock markets, they're anticipating demand. Remember, there's a lot of oil, US production that has basically fallen off as a lot of producers have struggled to keep wells open. They're not, opening up new wells, etc., etc. And the market, as I said, you look at the rebound in the stock markets, recovery in economic activity is suggested by the markets, which is good for oil.
Yeah, simple as that, really, isn't it? Let's face it.
But you could come back with a question, of course. Will the oil price sort of price in the increasing risk of a likelihood of a lot of these lockdown measures being tightened again, i.e., if the infection rate continues to build in the US and a lot of these states, will they start to tighten things up again, which would be negative for oil as people stop getting in their cars, lorries stop delivering so much stuff. Look at Apple. Apple's started to shut down a lot of its stores in the US again because of the increase in the infection rate. You'd expect that, but Mr. Trump's just saying different things.
As he does, and of course
he does.
He's sort of trying to turn it up a bit as he gets closer to his what is it, the election November, isn't it?
November, yeah, that's right, yeah.
Yeah, and he's still flagging in the polls, isn't he? So there's still a bit going on there. And there's a John Bolton's book which wasn't particularly positive about him, was it, Jerry?
No, it's a bit weird because he was in government, as we all know, and so he's a Republican. And he's written this book, The Room Where It Happened, which is sort of accusing Trump of all sorts of things. And it almost looks like it's been written by a Democrat, someone in the opposition party, rather than one of their own. And there's all sorts of allegations. It's sort of, it started with pushing Xi Jinping, the Chinese leader, to buy more US farm goods. Do you think, well, is that a bad thing? But it's farm goods from all these swing states where Trump really wants to make a difference. He wants to be able to go on an election rally in Oklahoma, Tennessee, or Arizona, wherever in the Midwest, and say, "Look what I've done! America's getting great again. They're all buying our farm, all our grain and all that sort of stuff." But anyway, so Bolton has rather exposed that one for what it is. Anyway, but yeah, other things also happening. I think he's not really played the race card particularly well. I'm not saying he's a racist, but I think it does look like he hasn't wholeheartedly supported the racial, the question mark over all these racial injustices, and I think he's also hasn't done particularly well with this coronavirus epidemic, as we know it, and we've been talking about that for a long time. But it looks poorly managed. It looks a little bit head in the sand, and he's trying to do, because he's absolutely fixated with the stock market. If the stock market does well, he'll do well. Anything he can do to push the stock market up by bullying Jay Powell at the Federal Reserve, or just talking it up by releasing, easing the lockdown measures and making sure that the economy can do as well as possible, even at the risk of everyone's health, which is just weird. Anyway, so you've got him struggling in the polls. I was looking at the polls this morning. They're not. I think the last one that was published was on Thursday or Friday, and it was giving Biden sort of anywhere between 8 and 10 point lead over Donald Trump, but Biden's kept very, very quiet. He hasn't had many press conferences for quite some time, and maybe his strategists have realized you don't have to do anything. Let Donald Trump dig his own grave.
Let himself implode.
I think so. So I guess a lot of Americans are looking at Donald Trump, looking at Joe Biden. Of course, Joe Biden actually hasn't necessarily got the I think has he got the ticket? He probably has by now anyway. So he's got to choose his running mate, and that's his next big decision. There's a big pressure on him to choose a black candidate, of course, which is something that will probably happen, which will be fine. But I think Americans are just wondering whether they want another 4 years of Donald Trump, the maverick president.
Do we want another 4 years of his tweets affecting the market? Probably do that.
I don't know. I've pushed a button on my phone, as I do, and I haven't realized what I've done. But now I'm getting woken up with tweets. Even if I've closed Twitter down, I get these tweets about from Donald Trump, and it just sets me going. I can't go to sleep after reading them, which is such a pain in the ass. And you might say, well, don't have your phone near you, but yeah, that's my next.
There's got to be an easier way, but let's talk off air and we'll get that sorted for you.
Yeah. But it's interesting because Trump, he's always been referring to Joe Biden, because Joe Biden's what, 78 is he, and Trump's what, 73. Biden, he's going to be 82. Is he going to have a second term if he is elected? Oh, she's going to be a right oldie by the time. I'm not being ageist here, but it is quite an age. I don't know many people who could shoulder those sort of responsibilities. But so Trump
makes the mockery of the sort of enforced retirement ages, doesn't it? When they're sort of trying to put people out to pasture just because they're a certain age. You've got the people running the country are significantly older.
And
the finest minds in the world, and it's like
Warren Buffett, who's 89, the second richest person in the US. Running Berkshire Hathaway, just extraordinary. But yeah, just it's not a barrier. At least it doesn't seem to be. Anyway, so Trump, I
was going to mention Greenspan, but of course, his last few years probably weren't that successful, were they? Maybe
they weren't. Yeah, he was. I think that was the feeling at the time. Yeah. So Joe Biden, Sleepy Joe, that's what Trump calls him. But if he is sleepy, with the way the polls are turning out, you'd wonder whether Trump's gone a bit comatose. Clearly he hasn't, because he's trying to make as much as he can. But that gathering, the what do they call it, his roadshow, election do in Tulsa, he was supposed to get 19,000 people. It's not a big event, but in the end I think he only got something like 9,000. He's blamed all sorts of things for the fact that not many people turned up, but I think he's struggling, Aid. That's it. We'll leave it there.
Yeah, time will tell. Okay, anything else to quickly cover off on before we look at the events for the week ahead?
We could talk for hours about everything, Adrian, but no, not really.
Okay.
Well, let's get on to the calendar.
Let's do that. Okay, so I'm just looking at the Forex Factory calendar on here. It is a relatively quiet week this week. There's only, if you look at the calendar here, there's only a handful of red high impact numbers. Jerry, do you want to take us through the highlights?
It's always curious when Forex Factory, which is it's well laid out and it explains it quite clearly, but their wisdom, the way they change them from high impact to medium impact. I mean, certainly I would regard manufacturing and services data in the Eurozone and the UK and the US as high impact. There you go. That's my point. Of course, they have highlighted some of them as being high impact, French and German services manufacturing data. But nothing today really, Adrian, just so make it very, very clear. Central bankers are talking all the time. A lot of people sometimes refer to this as fluff, and it is often trying to sort of cushion the markets and just give them lots of platitudes. So we don't tend to spend too much time listening to certainly governors from the Reserve Bank of Australia and Bank of Canada. It doesn't make a big deal really, but certainly Tuesday, tomorrow, services manufacturing PMI. Remember where the PMIs work, Adrian, that this is a survey of the purchasing managers, and if more than half are positive, that means basically the sector is expanding. Less than half means it's contracting. So as you can see, the numbers here, they are still negative, but not as negative. So a decent pickup. It's the flash manufacturing and services numbers for the whole of the Eurozone that you can see down at the bottom. That's the ones. Yep. So 39.4 last month, 43.8. That's a pickup. And everyone would say, wow, that's encouraging. And of course it is. Remember, they're ahead of us as well in the Eurozone. They've 2 or 3 weeks.
Yeah, a couple of weeks. Yeah, definitely.
Yeah. So is it good? It is good, but it's still contracting. They're both the manufacturing and services sector, which make up the whole economy. They're both contracting. So that's not good news, but it's encouraging news at the fact that they are starting to improve. And then you've got the sterling ones, UK ones as well, Adrian, which you just highlighted. Well, blow me down. We're not doing that badly either. 45.2. Well, I say blow me down. These are what we call consensus or forecasts.
Yeah.
So we're not over that line just yet. But I don't see why we shouldn't be doing as well. I think there's a lot of pent-up demand, I believe. I think a lot of people who've been stuck at home, haven't been spending any money. There's a lot of people that want to spend a lot of money. And I'd love to push the fast forward button and see how well it does recover. But so
well,
interesting.
Once again, I was driving along to drop my child off at preschool this morning, and every man and their dog seems to be getting their driveway done at the moment. So people are spending somehow. For sure.
I've eventually got a replacement for my worn-out freezer. Haven't been able to buy a freezer. God. Charcoal for your barbecues. What are you saying? Hot tubs, decking, you name it. You can't get it for love nor money. Yep, bikes. Absolutely. Can you buy a bike? There's not one bike available anywhere. Well, if you're selling bikes, grab it while you can, because eventually we'll all say, "No, I don't need that bike."
Yeah. Maybe Mike Ashley was right. Was it 5 years ago when he bought that failing bicycle retailing company?
Evans, wasn't it?
Yeah, Evans Cycles.
Yeah. No, I think. Yeah. Well, he's bought enough retailers. They're not all.
He's got to get one right, isn't he?
Yeah, I was going to say it's a bit of a scattergun approach. I wouldn't praise him too much, Adrian.
I'm certainly not. Okay, Wednesday, New Zealand official
Reserve Bank
interest rates. Yep.
Yeah, nothing there really. The resource currencies have done really well, Adrian. If you look at any Aussie dollar, New Zealand dollar against the dollar, they have been performing so well after a catastrophic dip in March. Gosh, it looks.
We looked at those, and they're all sort of flying back way above where they were. If you look at the likes of Aussie dollar, so Aussie dollar, okay, that's about where it was in its peak at the beginning of the year. But some of these other currencies, they're way ahead for the the sort of the February sort of peak there. Aussie Swiss, Aussie CAD. Look at that.
I think it's a combination of lots of things. I think certainly they've managed to deal with the pandemic a lot more effectively, partly because of the fact that they are more isolated than a sort of cosmopolitan centre like London and in the UK within Europe. But they've done it. Apart from the fact that we've seen a spike in infections in Queensland and Brisbane, but that's part of the reason. And obviously, commodity prices have jumped back up again. So, despite the fact that Australia is having quite a big political spat with China, its biggest trading partner, Aussie dollar's held in there. It's extraordinary. I take my hat off to them. Anyway, we're not expecting anything from the Reserve Bank of New Zealand, so rates stay on hold at 0.25%.
Okie dokie. And then Thursday?
Well, Thursday, Friday, there's a bank holiday in China. People ask me, it's a bank holiday in China that relevant to us? And I'd say that the Chinese markets are influencing and setting the tone. So you've got the US market shut, and then in the evening, midnight time, Far East markets, and then eventually China opens up, and it can set the tone overnight, which then affects our markets the following morning. We'll start to talk about it before the market opens. Well, the CSI is down this or up that, and it does affect us. So if they are on holiday, it's a bit like when the US are on holiday. It means there's less volatility or less sort of impetus first thing in the morning. So anyway, that's my reading with bank holidays in China. We have got durable goods. Again, this always used to be a high impact. It's an important number. It's the core durable goods that we look at, Adrian, which excludes some of the big ticket items. And someone said to me, what are the big ticket items? I said aeroplanes normally, but no one's buying any aeroplanes. But there is a big difference between, maybe there are a few aeroplanes going through, maybe there's a few ships being sold or something. But anyway, 2.5% is the number, a lot better than the horrendous number the previous month. 7.7% fall. Shocking. So that's durable goods, 1:30 on Thursday. And the other thing, you've nailed it. It's something that people never really looked at before this all went into free fall in the following the pandemic. global pandemic. Initial claims were just sort of not really sort of looked at all, just the monthly numbers, the non-farm payroll. But these weekly unemployment claims, and they've been persistently high, and the market has constantly overestimated the improvement. And last week we got 1.5 million, and we're expecting 1.35 million, and this week it's 1.3 million is the consensus. Let's see how it goes. But as ever, the numbers are worse than the market's sort of expecting, but the market still does well. So there you go. Does it matter?
It's interesting data here. I mean, obviously this is always going to be a positive number because it's the number of individuals who filed for unemployment insurance for the first time. But of course, it's not a net number. That would kind of be more interesting now to see whether some of these people are, getting jobs again.
Oh, definitely. Yeah. So, this is the reason why it can be a bit misleading to click on the graph on the right hand side, Adrian. You see, you could add up all those numbers and think, gosh, so there's 1 week of 3.5, then 6, and that's 6, and you add it all up and it comes to sort of 40 odd million or more. And those are the claims. But as you quite rightly said, a lot of those people have gone back to work.
Yeah, you'd hope.
Well, I know they have, quite a few of them have, but it's still a problem, the fact that people are still filing for initial claims. So those aren't people who had been claiming, gone back to work, and then suddenly decide they want to be unemployed again. It is a problem. Big things going to happen when all these state aid, the support, the furloughing of workers runs its course.
Yeah.
And we're going to see that in October, Adrian, not in June or July.
Yeah, that could be a bit smelly. Having said that, there are people, quite a lot of people who are, even though the furloughing system's in place, are still being, let go now. My sister being one of them. So, even though it's not necessarily costing the company anything just to keep them on, they're like, I guess they're thinking, well, why delay the inevitable? Let's do it now. And of course, actually, by doing it now instead of October and September, they managed to let her go before she's been there for 2 years, which is interesting. So,
yeah, that's a bit cynical. Interesting. I would say that there are a few companies that have also decided to pay back some of the furlough costs that they've received from HMRC, i.e. the furlough scheme. And you think about it, oh golly, that's really kind, that's that to be doing that. But then you find out that it politically it would be impossible for them to pay bonuses and dividends to their shareholders whilst also accepting handouts. And so by a little cynical hat on,
a PR disaster.
I really think they're engineering something else, not necessarily being altruistic towards our Her Majesty's government, but that's me, just slightly cynical. That's a 60-year-old being cynical. Apologies about that.
Okay, and then the last thing, because we'll cut off pretty much.
Yeah, the revised UOM, the University of Michigan Consumer Sentiment Number, even better, a revision from 78.9 to 79.1. If the consumer's happy, the markets will be happy, because if consumers are happy, they spend. If they spend, companies make more money. If they make more money, stock price goes up. There you go. That's it, Adam.
That's it. I hope everybody wrote that down. That was good. Well, that's pretty much it for this week's podcast. Thank you for that, Jerry, as ever. Now, this week, we do have a few events live this week where we're going through some strategies, how we apply our techniques into the live market. So if you'd like to come along and attend one of our live trading webinars, you'd be more than welcome. You have to come to our website, though, to do it. And we've done a short link for your convenience. If you're seeing it on screen, you can sort of read it for yourselves, but I'll read it out if you're just listening to us. So bit.ly, so bit.ly/learnts. So bit.ly/learnts. You can register for one of our events, and we'll teach you the 3 simple steps for identifying turning points in the market to help you to pick up some great trades. So if you'd like to come along, get your name down, and we'd love to see you online for that. But otherwise, we'll see you again this time next week for another Trend Signal Trading podcast. So keep the risk tight, everybody, and hopefully you'll have a great week trading. And bye-bye for now.
Bye now.